So, guys, welcome to this monitoring planning for the ECB announcement. This is Mark from FX Instructor. I guess you all know me already. If you have any questions on anything, feel free to ask. So, where do we start? What's going on? Let us start with what the calendar is telling us. People are now expecting a rate cut by the ECB. The consensus forecast is for a 25 BPS cut. Some banks are calling for a 50 BPS cut. Will we get 50 BPS? That's a minority opinion right now, but if we do, that would be a nice excuse in looking for further weakness in your euro. If we get as expected 25 BPS, that will be another story. Yes, the textbook says that if a central bank cuts interest rates, then the currency of that central bank should weaken. That's what the textbook tells us. But we as traders know this term or this phrase, buy the rumor and sell the fact. And if you look at your charts, I tend to think we did that yesterday. So again, earlier, we have your BOE announcement already. Interest rates remain steady. Asset purchase facility was increased by 50 billion as expected. And China, of course, did their own surprise rate cut. But let's talk about what we now face in our charts. Let's talk about what we have in our screens. So yesterday was a holiday for the U.S. We all thought that, hey, this is a U.S. holiday. Let's not do anything. Let's get out of the market. Let's go party. Let's go take a rest. Let's take a vacation. And what happened? Well, market did not take a vacation. We saw euro cable selling off ahead of this rate announcement. So what does that tell us? That the rate cut by the ECB has already been priced in. Okay? A 25 BPS cut has already been priced in EURUSD. So we have done the buy the rumor part of that buy the rumor, sell the fact phrase. Now, what does it mean if we have buy the rumor, sell the fact? We face the risk that instead of getting a textbook response, a follow-through sell-off, once we have our 25 BPS cut, we may actually see as a knee-jerk response the euro strengthening. Why does this happen? Because people who already bought into the idea of a rate cut sold the euro yesterday. So once they see that the rate cut is only 25 BPS, they'd start thinking, you know what, we already sold euro yesterday, so let's get out of our trades. So a big risk now is if we end up with a 25 BPS cut only, we might see a knee-jerk bounce in euro. Would it be sustainable? I tend to think that in the long run, because you have a rate cut, you're still going to get a weaker euro. So to me, any bounce, any knee-jerk bounce in euro may actually be an opportunity to get better prices from which to short our EUR USD. Now, if you're part of those people who are thinking buy the rumor, sell the fact, there are other stuff that you would like to monitor as well. What are these? Let me show you one. Let's look at the equity market. Stock traders have been busy today. They have priced in the idea of a rate cut as well. And what happens if a country cuts its interest rates? When there is a rate cut, that means there's liquidity in the market. That means there's more money in circulation. And some of this money that's entered into circulation goes to the stock market. So the stock market's response to any rate cut is to see some strength to it. Okay, if borrowing costs go down, the stock market goes up. Now, we said buy the rumor, sell the fact when we were looking at euro. Does buy the rumor, sell the fact happen in the equity market? Well, we're already seeing buy the rumor. Sell the fact is a big question mark for me. Are we going to get sell the fact, or are we going to get a further rally? If we get a further rally in your FTSE, in your DAX, in your CAC 40, following the rate cut, then that adds to the argument of a non-textbook. In fact, that adds to the argument of a euro response that is a complete opposite of what the textbook tells us. Again, the textbook tells us rate cuts are bad for a currency, but we have seen by the rumors of the fact, and sell the fact means instead of a follow-through sell-off, you risk bouncing. So what's the plan for me? Well, I actually have two plans. One is I can straddle the release, meaning before data comes out, we will put in a buy stop, sell stop in the currency that we want to trade. I was actually planning to take an Aussie trade on this, but because Aussie has moved already, I think I'm going to just go for a simple euro trade on this. My initial plan is straddle the market. Put a buy stop, put a sell stop just seconds before our actual rate announcement. But we'll discuss that later. Let's go back to how do we use buy the rumors of the fact. How do we use buy the rumors of the fact? Let's put it this way, guys. Knee-jerk response could be position squaring by those who shorted euro since our descending triangle breakout yesterday. If I were to see prices later on hitting your 25.53 region moderate support, or better yet, your 25.68 area, 21-day EMA, descending triangle breakout point, then I would consider those price levels as potential entry points following the sell the fact action. In the end, our rate cut would be bad for the euro, even though we have the potential for a sudden bounce as people who shorted before gets out of the market, as buy the rumor, sell the fact sets in. Okay, so let's talk about plan B, and we'll talk about plan A later. So plan B for me is, I see prices around these areas, I will consider taking the sell side. You don't have to use a sell limit on this. We would want to see some consolidation or maybe high wave spinning tops turning out in our hourly charts just below our 2553 or 2568 level before we actually pull the trigger on a sell. So no sell limits for me. I will look at price action and I will gauge whether the position squaring trade is over, and I can once again look at the possibility of weakness for the euro. Okay, so that is plan B. Allow for the sell the fact part of buy the rumors of the fact to occur. Once it's over, then we can look at taking the sell side on the rate cut. Now, what if we have the extreme? The extreme says we're going to get a 50 BPS rate cut. If we have that, then I would look for a follow-through sell-off. I wouldn't look for a pullback anymore since people have priced in only a 25 BPS move. Okay, there's actually one more possibility. What if we don't get a rate cut? What are the chances of us not getting a rate cut later? Well, let's put it this way. In the last meeting, Mario Draghi said that the time was not right for them to cut rates. Okay? Why was this? Before the last meeting, European politicians have been difficult. They couldn't agree on what to do. There was no sense of unity in Europe. And the ECB, Mario Draghi in particular, said, we're tired of this. You're always asking us to save your posterior, to save your B blank TT. Now, he didn't want European policymakers, European politicians to continue relying on the ECB. So that was one reason why they didn't cut their rates then, to try to communicate to politicians that the central bank, the ECB, can only do so much. Fiscal policy should be adjusted as well. Okay? The politicians should come up with their own plan on how to initiate recovery, on how to initiate growth. So now that we've actually had a surprisingly successful, if not very successful EU summit, I think that the ECB will be more amenable in actually cutting rates. So although officially the position of the ECB before was the timing is not right, we tend to think that now their position would be the timing is right. Why do we think this? Simply because politicians finally did something. They may not have convinced everyone that doing Eurobonds would be a good idea. They may not have convinced everyone to do everything that they hope to do, but at least the possibility of joint action is there. They've shown it by reallocating the funds for EFSF, ESM to shoring up the banking system. Well, GY, if they don't cut rates, then I would reverse. I would look for a reversal of yesterday's sell-off. I'd look at your euro and I'd look at it at least getting to the 21-day EMA at 25.68. More likely, we might actually see our euro getting to yesterday's highs if we did not get a rate cut. That would be an even worse form of buy the rumor, sell the fact, because the fact was totally unexpected. Remember, when it comes to news trading, it is the unexpected which moves the market. Case in point, the big surge that we had in AUD, USD, just before the decision by the BOE. Why did we suddenly see a spike in Aussie? Because the Bank of China, the Chinese central bank, suddenly decided to cut interest rates out of the blue. We got that news, and so market jumped by 50 pips. It's unexpected events which normally gives you a big price action. Excuse me. Okay, so that's plan B for us. look for sell the fact to happen if we get our 25 BPS cut, and then look at the possibility of joining the sell side once more after things have settled down. In the end, a rate cut is a rate cut, especially if during the press conference you will hear Mario Draghi showing willingness to consider printing more money or cutting interest rates even further the next time. Remember that the more extreme elements are calling for a rate cut of 50 BPS. Now let's talk about Plan A. If you guys attended a couple of weeks back, I think that was last week, FX Street did this how to trade the news thing. And back then I was discussing how to trade the news dumb and managing your trade smartly. So that is my Plan A as far as what to do with this rate announcement by the ECB is concerned. I plan to trade it dumb, but try to manage it smartly. Trading it dumb would mean that I will just use a straddle. As I said, I originally planned on jumping in our Aussie. Why Aussie? Because commodity currencies tend to benefit from rate cuts. Whoever is cutting rates, whether it's the Americans or it's the British, your commodity currencies would normally benefit from it. More money simply means more money chasing a finite amount of commodities. If China cuts its rates, Aussie should go up. This is because a rate cut by China will probably mean more economic activity there, increased demand for coal, for steel, for the commodities which the Aussies, the Australians sell to China. So they were more likely to make money. Their trade balance would likely improve if China cuts its interest rates. Okay, where were we? We're talking about our Plan B. So Plan B for me is, or rather Plan A. Plan A for me is to trade the market or to trade the news dumb. A couple of seconds before the release, I'm going to put a straddle in our euro. Now, if you attended that, again, that webinar on trading the news dumb, I introduced the straddle EA. If there is a rate cut, gold should benefit, at least as a knee-jerk response to the rate cut. In the long run, I don't know. In the long run, I think the rate cut would not be that much of a benefit to gold. Gold, unlike a commodity currency like Aussie, does not give you a return. Okay? Let's put it from this perspective. Rate cuts results to an imbalance in interest rates. Holding on to gold, buying gold, does not give you an income. Okay? Buying gold is a hedge. Buying gold is about making money out of where gold is going. But buying Aussie is also about an income. You have pension funds, you have other people who are not after a stronger currency, who are not after making money out of the currency action. But you have some people out there who just holds probably $1 billion, 1 billion euros, and they just want to make something out of it. And if putting their money in the bank in Europe will give them zero interest, then they might as well change that money into Aussie, put it in a bank in Australia, and get Australian interest rates on their account. That's the simplest way a big rich guy who doesn't want to bother managing his money could do. That's the simplest way for them to make money. Live on the income of their $1 billion or their billion euros. So there are people who are not after the currency gain itself, but are after the interest rates. Well, exactly. Carry trades are not, that's a term that's not, that hasn't been used often lately. That's a term that was very familiar back in 2004, 2005, but lately we haven't been using it. But it is still something that some people are looking to do. It's not just that popular anymore, but it actually still happens. So your commodity currencies would benefit. Gold as a knee-jerk response could benefit, but in the long run, I don't think it has a long-run impact, because holding on to gold will not give you any income, will not give you any return. It's just paper. You only make money from gold if the price goes up. That's it. If you hold on to Aussie, you make money on interest on the swap, or you make money out of the currency gain itself. All right. Where were we? We're talking about our plan A. So the plan A for us is to just put a buy stop, sell stop in our euro. The plan is to put our straddle just seconds before the release. So how does that work? Let me show you how it works. I just have to make sure that it's a demo. I don't want to make any mistakes. So the plan for me is this. Okay, this seems to be a chart that is full of a lot of charts there. Let me clean up let me just clean this up. So guys, if you attended that class of mine from a few weeks back, we introduced straddle trading. So the plan for me is that in the final seconds or a few seconds before the release, we will put in our straddle trader. I will use default settings, plus 8 pips, minus 8 pips, a buy stop and a sell stop would be placed. Okay. TP, let's put it this way. I'll probably adjust that to 50 later. Stop loss, I'll probably adjust it to 20 pips from the entries. So, why use this? Because I don't want to... Oh, expert advisor is not on. Okay, now I turned it on. So, let me do that again. We will do this so that we can quickly put a buy stop, sell stop just before. Again, we want to put in our entries just seconds before the release. And what would happen then is that, okay, sorry. This is a problem. I put in a security feature in my own code. Now it's not working for me. Let me open a demo account. Let me name it for my friend whom I placed the security check for. All right, so this should work now.
Incoming mail.
So what I'll do then is that I'm going to put a straddle right before the release of data. So what would happen is that if we have buy the rumor, sell the fact, or if we have the sell the fact part of buy the rumor, sell the fact, then market would trigger a buy stop for me if sell the fact happens. And once we start seeing the initial spike stall, then we will take something out of the market and then look for possibly further gains on that pullback of yesterday's sell-off. Now, if we get a surprise, we get a 50 BPS cut, then I would expect a further sell-off to happen. So our sell stop would be triggered, our buy stop would be removed by then, and we will be in the market. For our purposes, I will leave this on here so that you guys can see things in action, and I'll just do it in my other platform. The candlestick indicator is something I made. You can get a free copy from my website. Chims, is that okay? Can you see it now? If you want a copy for it, go to myfxideas.com, go to the store. You don't have to buy it. Scroll all the way down. If you went to the store, you scroll all the way down and go to free stuff. There's a free stuff section there. So this is what we'll do. I only have 3 minutes, so let me get set up from the other end. Again, our option is euro. Initially, we were thinking about trading your Aussie, but because... Okay, let me remove this so that I will do the demo and the real at the same time as well. Initially, we were planning on doing it in the Aussie, but because the Chinese announcement already moved the market, then I'll have to settle for using euro for this particular trade. Now, guys, what do we want to see out of this? Again, we expect that we're going to have a 25 BPS cut. We don't think that 25 BPS cut is enough to see a follow-through sell-off. However, there is that extreme possibility of a 50 BPS cut. We get a 50 BPS cut, then we would expect a sell-off to happen. That's plan A. Plan A is to do this through a straddle. Plan B is to wait for a pullback to happen and see your triangle support, your 2568 area as a pullback point, and then jump in at that point. Let me put the demo straddle in already so that I don't have to think about it. And let me do my other straddle. We should be seeing that announcement any second now, folks. Let me see. We have a 25 BPS cut as expected. Now, we're not seeing any immediate response. Again, the problem is this is something that we priced in already. Now we suspect that buy the rumor, sell the fact can happen. If after 5 minutes we're still stuck at the current levels, then I will remove our straddle by then. Okay. Looks like we're seeing a follow through. Market is expecting that we're going to hear more out of the announcement from Mario Draghi from the press conference. Our buy stop has been removed with our sell stop triggered. The target for the sell stop is 35 pips. We're encountering S1 at the moment. We don't want this to stall too long. If after 2 more minutes we don't have further price action, then let us just get out of our short. Okay, I'm actually planning on adding an automated trail stop, but I haven't placed it yet. So we'll give it 2 minutes to look for a follow-through sell-off. No follow-through sell-off in 2 minutes means that market isn't too confident about what it thinks will be happening here. So this is a demo that we have here, guys. I also got triggered in my own account. I'm really uncomfortable about this. We've had 2 minutes already, and yet I'm not seeing a great move here. Normally, we should be seeing a huge move already, but I'm not getting it. I guess that's because I'm looking at the 1 minute chart. It doesn't look much in the 1 minute chart. But still, problem is we partly priced this data in already. That I think a good idea now would be to book some of our profits and then consider jumping in. Edward, I would expect Euro Pound to be very weak at this point. So let's see what's happening there. Sorry. Yes, brokers would widen their spreads ahead of data. That's not their fault. The banks, the market makers would widen the spread before the data because they don't want to be on the losing end of a trade. Normally, they want to discourage people from jumping in, trying to arbitrage, trying to take advantage of their prices. I'm just waiting for things to load. I think I'm running a lot of stuff at this point. Hey, where's my Euro Pound? So are we seeing a big sell-off in Euro Pound? Yes, we are. Sorry. Our target for EUR GBP. Oh, okay, sorry. That's not the platform that I use for charting. There we go. Our objective for if you want EUR GBP should be, let me wait for things to load. We have a range play in Euro Pound. Our objective is to get to 79.85. We might actually look for a bounce from 79.85. Remember, it's not just the Eurozone which is adding additional liquidity. The UK has also printed money. So if you're short in Euro Pound, I would look at the possibility of EUR GBP bouncing off that 79.85 moderate support level. Maybe waiting for NFP tomorrow. Well, I think NFP is NFP. It certainly is important, but this is an important event as well. I think the next stage for us now is to listen to the press conference. If in the press conference, Mario Draghi indicates a willingness to print more money, to raise or to cut rates again, then we should be looking for a further weakness in the euro. Guys, how willing is the ECB to jump in and help save the eurozone? Last time out, they sounded hawkish because they wanted the politicians to move. Now that the politicians have begun to take action, have begun to take responsibility, I would expect that the ECB will be more willing to take more responsibility, to take action. In fact, we already have the ECB already lowering its collateral requirements for loans. My blog is myfxideas.com. That's my blog. So if you want a copy of the candlestick indicator, just go to the store. You don't have to buy anything. Scroll down so that you can get the free stuff section. So again, with our sell-off, we would now look for the press conference to reinforce the sell-off. Now, if during the press conference, it sounds as if the ECB is unwilling to cut rates again anytime soon, if they say that they think that this is already appropriate, then that might be an excuse for people to quickly get out of their selling positions. Okay? So, questions, comments, folks? We now have a follow-through sell-off. I wasn't expecting that we're going to get a follow sell-off, but we have it. We used a straddle. Again, don't overanalyze things. Don't stress yourself by expecting buy the rumor or sell the fact to happen. Just react to the market. So in this case, we use a straddle to get in. We should actually be thinking about closing out some of our trades by now. Okay, take out half of it. We already have the market stalling. Okay. Okay. Any immediate concern or questions, folks? We only have about 6 minutes left. So next up would be the press conference. If in the press conference we start hearing things like appropriate levels, JD, for today, we may risk a sudden bounce during the press conference. Definitely, you would want to take a good chunk of your profits out by the time the press conference happens. If you hear the term appropriate, meaning interest rates are now at their appropriate levels, then that's a sign that the ECB will not automatically cut rates again next month, which means that you would want to get out of the market since people might decide to book profits as well. If they suggest that they're willing to cut rates again, then that would be excuse for further weakness. In the long run, I would expect euro to be weak. In the long run, I would look at euro as heading back to the previous swing lows. But for tonight, I think we've seen a big move already, and that the ECB press conference could change the situation for us. So folks, questions, comments, complaints? By the way, for those who wanted that straddle trader, again, send me a mail, you want a copy. And right there, I'm going to lock it to your name. So if we use a different name, it won't work. That's why when we initially used it, it didn't work. because I locked it to my friend's name and I forgot to change it back to mine. Aussie long term, I'm bullish. Australia is the only economy that's really doing well. They cut rates before because they thought they needed to preempt any negative impact from Europe. But now it's clear that Europe is taking action, so it's no longer necessary for them to cut rates again. So I think that Aussie, we should be looking at pushing back into this area, that previous congestion level. So I'd be looking for 105. GY, not necessarily. I know correlation looks like it tracks the euro, but they have completely different economic dynamics. Australia is about exporting steel, exporting coal to China. Europe is more diverse, but it also has problems. In fact, that's the problem in Europe. It's so diverse an economy that having a single monetary policy is difficult to get things working for everyone. That's the main problem there. You have some economies that are manufacturing based. You have some economies that rely on tourism. You have some economies that were driven by the housing market. And those different economies require different monetary policies, which unfortunately, since you only have one central bank, could not happen or could not be done. Okay, guys, any questions? So again, thank you for joining. For those who are short, you don't want to have a good chunk of your profits, your position in by the time the ECB press conference starts. You'd want to book profits by then. Okay, guys, thank you, and I'll see you next week, next Wednesday, or next month.